Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. And now, Financial Renaissance with the M's.
Good morning, financial knowledge seekers. I am your host, Emma Folks, and we are on Financial Renaissance with the M's. You are tuning into us live, streaming on ssnatl.com. And if you're on Facebook, you're watching us live on Sensation Station Network. We have an exciting show tonight. So make sure that you go to the comment section. You're going to want to throw your comments in. And if you want to text us, you can text us at 678-613-5857. We have an incredible show today, but I got to first give a shout out to my photographer, Karen. She came and took team photos for us this Friday, and I have to say I am actually sore from contorting my body in ways to come out with a perfect picture. I have the utmost respect for models. They make it look so easy when we flip through the pages of magazines. More power to them. That's why some of them get paid the very big bucks. But today, on today's show, we have our very special guest, Herb McCoy from Fidelity Bank. We're going to be jumping into borrowing, lending, and also giving back. We're going to be talking about building our communities, strengthening our communities today. And then, of course, I'm going to finish or going to add to the 5 financial spring cleaning tips for this week, things that you need to be working on, and then we'll kind of reflect on or recap some of the past 10 things that you should have been doing so far for the month. And then I'll go through my top 5 news stories for the week. And of course, there are going to be some repeats in the financial news. And then we'll round it up with 5 tips of things that you can do with your kids to make your kids appreciate, or the kids in your life appreciate, understand money, and be more fiscally responsible, so we can build fiscally responsible adults. Everything that we do on this show today is all about helping our communities. And our communities, it's not a black thing, it's not a white thing, it's not an Indian thing, an Asian thing, it's an American thing. We're all about strengthening our communities. We're all about making our country better. We know that we've had 10 years of tremendous growth in our country from a stock market standpoint. And now we need to just start, getting ready for what may happen, because the stock market is cyclical, meaning that what goes up must come down and what's down must come up. And we're going to talk about ways that you can take advantage of the markets when the markets aren't as well or aren't going as well. There is a phrase called the contrarian method of investing that I would love for everyone to just kind of look up. And it's doing the exact opposite of what most Americans do. You can't make money if you buy high and sell low. So it's actually doing the exact opposite of what you're usually going to hear financial pundits talking about. Basically, you're going to be looking for opportunities when the economy is going to get a little shaky. And, so in order to do that, you're going to have to get your financial house in order. And that's what this spring cleaning is all about. It is Financial Literacy Month, which is a very big month in my house, because it's time for us to take stock of everything that we've been doing for the year and just figure out what we want to do going forward. And I definitely implore you, if you are having financial meetings in your house, bring your kids, the teenagers. Everybody needs to be involved to the level that they're able to comprehend. But you want your kids to understand what's going on, and everybody in the household should be all following on the same path. If the path is to grow, if the path is to level up, if the path is to make sure that you're passing legacies down, well, kids need to understand, and everybody in the family needs to understand the things that need to happen so that, there's monies there to invest, etc. But listen up, on today's show, like I said, we're going to be talking about building better relationships with community banks. We're going to go over our top 5 news stories for the week. And we are kicking all this off on Financial Renaissance with the M's. We'll be back in 300 seconds. And we're back with Financial Renaissance with the M's. I am your host, Emma Folks. And I wanted to say, I am so overjoyed. I don't know what it is, but you ever wake up and you just feel like an overabundance of love? That's what I'm feeling like today. It's raining. It's just something about the rain that just makes me really, really comfortable. And I guess because with rain comes growth, and with growth comes change. And I don't know, that stuff just gets to me, and I love all that the rain brings. So before the break, we talked about recapping the first 10 financial steps that I wanted you to hit on for the month. So let's just go through these really quick, and if you have questions, comments, go ahead and throw it on our Facebook page at Sensation Station Network, or go ahead and text us at 678-613-5857. So the first financial spring cleaning tip is to become mentally ready to become financially astute. So, I'm a Star Wars geek. As Yoda said, do or do not, there is no try. So it's not that I'm trying to do better or I'm trying to budget. I'm trying to, no, we're going to do these things. So get it in your mindset, get it in your family's mindset that this is what needs to happen. Then you're going to take inventory of your income and expenses, really focusing on the expenditures, what's going outside of your household. Then you want to, when you're looking at your expenditures, you want to look at things that you may not really need to be doing or use regularly. Shed the money suckers. Shed out the things that, if it's subscriptions and you don't watch TV, if it's cable, is it time to cut the cord? Figure out what is it that you really don't need to be doing anymore. Go ahead and let that go. And then the fourth thing is organizing your financial house. Make sure you have a systematic, orderly process of organizing your finances. So when bills come in, whether it comes in, old school via paper mail, where do those bills go so that they don't get lost in the shuffle of all the junk mail that we get? And if the bills come via email, what are you doing to make sure that, on payday eve, these emails are still top of mind. We want to save paper, but if you need to print them out for now and put them with the other bills, put them in a box, a payday eve box. This is what we're going to do the night before we get paid. Go ahead and do that. But you should have different boxes, different folders, different envelopes for all the different types of expenses and things that you have that you're responsible for. And then the fifth thing is checking your credit. Go ahead and order your free credit reports. The biggest thing is making sure that things on your credit report are accurate. And then going into week 2, the sixth step was to clean up the mistakes on your credit report. So there is a Fair Credit Reporting Act. And legally, the Fair Credit Reporting Act protects you by requiring the credit bureaus to furnish correct and complete information. So if you see something on your credit report that is not accurate, you have to write them and let them know that, hey, this is not, I've taken care of this has been satisfied. And the other thing is making sure that if your bill has gone to collections, you find out legally whether or not you have to pay the collections agency, because it'll still be on your credit. So you want to contact the actual person that you had the agreement with and figure out how to pay them versus paying the collections agency. And then the seventh step that I wanted everyone to take heed of is just kind of paying attention to what's coming in as far as making your money count. So here's where you need to kind of get an accurate picture of the amount of money, like what is it that you want to have in the future. Look at your excess cash flow, and can you use any excess that you're kind of, going to the club with or going out to dinner with or buying bottles of wine with? Can you use that cash flow to do something else? Make an investment in yourself, make an investment in someone in your family. And if you're unable to have the excess cash flow, this may be a time to consider getting another stream of income coming in. And it doesn't necessarily mean going to the mall and getting a part-time job, because as we know, retail is dying. So with the invention of the smartphone, there's this thing called 4G. We're able to do all types of things on our computers and on our phones. Figure out a way for you to get a side hustle, another stream of income coming in that's going to be flexible with your schedule, that you can do at night, that you can do after the kids are asleep, that you can do on the weekend. And then you can use this extra money to build your cash reserves, your emergency money. You can use these extra funds to replenish your emergency savings, or to even start it. You can use the extra money to start paying down your debt. You can also use it for a well-vetted business opportunity. So it's not just for savings, saving money. Having cash is to kind of take you to that next level. And then the eighth thing I want people to do is calculate your net worth. You should know that number. Your net worth is like your report card, okay? And your net worth is as simple as generating or calculating the difference between the things that you owe or own, the things that you own. So your house, if you have a shoe collection, the assets that you have, the portfolios that you have, what's in your bank account, and then from that you're going to subtract your liabilities, what you owe. So you have what you own, your assets, and then you subtract out your liabilities, and that's going to give you your net worth number. And so that number is very, very, very important. So when we come back, we're going to talk a little bit, we're going to go into the next stages of what we need to do with our financial spring cleaning. Good morning. Thank you for joining us on Financial Renaissance with the M's. We have a great show today. We are still celebrating Financial Literacy Month. And this month is the month where we're going to take stock, take inventory. We're going to audit everything happening in our financial house, get ourselves right, get ourselves prepared for what may come in our economy. This morning, we are going to continue recapping what we're supposed to be happening for the past 2 weeks in your financial house. And in the studio today, we have a special guest, Herb McCoy from Fidelity Bank.
Good morning. Thank you for having me.
Good morning, Herb. Tell us why you're here today.
Well, Emma, I'm here today to further the discussion about financial literacy. Naturally, financial literacy, I'm sure you guys have probably gone over this before, relates to just possessing the skills to be able to manage your money. Therefore, you're able to kind of move forward and have a more quality life from beginning to end.
All right. Thank you, Herb. So in finishing the last two steps that we need to do, step number 9 is reviewing your debt situation. How much debt can you afford? In general, freedom from consumer debt is a liberating thing. So this is one of the ways that you can regain control of what's happening in your financial realm. And then the 10th thing is to just set your priorities. Get real with yourself about what you want to do financially. When we return, we'll be back with Herb McCoy from Fidelity Bank. And you're back with Financial Renaissance with the M's. We have a great show today. We are going to be talking about borrowing and lending and just giving back to our communities, building our communities, getting our financial house in order. And for this week, the tips that I want to share with you, these are oldies but goodies. These are like samples. You know, Puff Daddy was famous for samples. We're going to sample some old tips for getting your financial house in order. And the step I want you to work on this week is setting SMART financial goals. And I know you've heard SMART millions of times before. It's a rehash, you know, making sure your goal is specific, measurable, achievable, rewarding, and trackable. What do you think about that, Herb?
Absolutely. Those goals and having those set is one of the trademarks in terms of moving forward and having some opportunity and some idea of how you're going to navigate through life. And so it's always good to have those goals. And when it comes to budgeting especially, being able to do that. And starting with the budget, we find that most people do not have a budget. And oftentimes it's one of those topics that we tend to be afraid of, or it's just too boring for us to engage in.
And to me, money, like to say it's too boring, like freaks me out, because how can money be boring? Because to me, it's like little seedlings. You plant them and then you watch them grow. And one thing that has come up, and I don't know if you've heard of it, is something relatively new, is, the budget is like a diet. Right? In the beginning of the year, everybody gets so geeked up and excited about following it and getting on track. But there's a new way of looking at budgeting, and of course it's geared towards millennials. But if it's geared towards millennials, jump on it, because they're doing things in a very, very organized, systematic approach. This is called passion budgeting, starting with what you love first, And then if you need to change some of the other stuff, you change that up. If your house, if you if your budget doesn't accommodate your house or your apartment, then maybe it's time to look at downsizing or shedding some other things, but starting with the things that you're passionate about first. The 12th thing, or the next thing I want people to focus on, and again, this is something rehashed, is setting, short-term, medium range, and long-term goals. And short-term goals is where your cash reserves comes in. Any goal that you have within the next 24 months, you want to make sure that you have some cash for that.
That's right, absolutely. We always suggest that. And you're mentioning those three different areas is where in setting your goals, it doesn't have to be one in which it's measurable that you can't reach. You touched again about being smart about it. Oftentimes setting a goal whereas you have an emergency fund and you begin to save for that and put money in there for that, and you can have other funds for more mid-range and long-term.
Correct. And so your mid-range goals are going to be things that you want to accomplish within the next 2 to 5 years. So you can do different things with those monies, but you want to start thinking about goals, whether it's moving into another house for the school district that you want your kids to go to. And then your longer term goals are going to be things that are going to happen, 5 to 10 years out. And you can do different things with those monies as well, but you want to make sure that you've got a 2-year, kind of a under 2-year goal, a 5-year goal, and after 10-year goal. And so when we coming up next, we're going to talk to Herb about working with Fidelity Bank and just the things that you need to do if you're a business owner, things that you should be thinking about as far as building relationships with bankers. We are back with Financial Renaissance with the M's. Good morning, good rainy morning to you. Hope everybody's out there being safe, driving, like you have some sense this morning. No rush, no rush. This morning we're going to be giving you the tips that you need to develop relationships with banks. I mean, everybody's doing stuff online, but I personally have, in the hard way, understood the value of having a relationship with an actual person, banker, somebody that you can sit down with, look in the eye. Your everyday checking savings is fine, but then when it comes to business banking, when it comes to mortgages, when it comes to making sure people know who you are, do you feel that the role of banks kind of and where we are today has changed a little bit? Have we gone too far? What are your thoughts?
Well, banking still is a relationship type industry, and oftentimes it is driven by the consumer. But one thing that stays true to form is because banks are so regulated in terms of trying to protect the economy and keep banks going. So they do follow somewhat of a set of rules, and they are going to use certain discretionary measures to make sure that they're lending correctly. So what we can do as consumers when meeting with bankers, oftentimes I always say, identify what it is that you're seeking. What are your needs? Your needs should always be satisfied first versus wants. So make sure you always do that. And I'm sure, Emma, you've shared about a lot of needs that we have in terms of shelter and going and so forth. Versus the want. And so bankers tends to look at that and see how is this needed if you're coming in and you're looking for a loan and you're able to communicate a business plan, if you will, of what it is that you plan to do if you are asking for a loan.
So let's talk about even before, because a lot of times, as with most business owners are running by the seat of their pants all the time, myself included. And a lot of times we don't realize that we're like, I think I can make this work. I think I can make this work. I think I can make this work. Oh, I can't make this work. I need a loan. And so what are some things that business owners should do before even thinking, even before thinking, okay, I don't know if I'm going to need a loan or not, but what are some things that people should do to prepare themselves to come in?
Have that conversation quite honestly with someone that you can honestly talk with. And even if that person ends up being your banker, just having a general conversation of what it is that you're thinking about. You may not be at a point where as you're asking for a loan, but begin to develop and talk about your aspiration, your goals, what it is that you want to attempt to do. And so oftentimes because bankers are so involved in the community and they have so many resources, they may sometimes be able to connect you with others
Before,
assist.
yeah, so before you
get
even
to
need
that
the
point.
loan, and that is so important. And I'm going to go into our third tip, my third tip for cleaning your financial house this week, which has to do with debt, and especially consumer debt. You want to get rid of as much consumer debt as you possibly can. And there's different types of debt. There's good debt and there's bad debt. And bad debt is consumer debt. That's when you're paying for stuff or you're charging up stuff that you should be able to pay for out of pocket. So charging a vacation on a credit card is not a bad thing, but you should pay for that when you get back within the next 30 days, 90 days max. If you can't, then maybe you shouldn't be taking that trip. So if you're charging clothes, if you're charging, things, your wants, right? And debt, you need to eliminate that, because when you do sit down in front of the bankers, you're going to kind of look at that. So student loan debt is okay.
Yes.
Home mortgages is okay. You need a car, that's
Yes.
okay. But other than that, you kind of want to get rid of some of that debt, right?
That's absolutely. You nailed it. Oftentimes, that's what bankers are looking at. And that gives an idea of the 5 C's, if you will, when you're looking to borrow, as far as, character,
Tell me.
condition, capacity, in terms of making a loan and being able to pay
So
back.
let's talk about that character thing, because I was once sitting in a room full of bankers that I was at a networking breakfast event, and they said that, in order for a bank to lend to you, they have to get to know you in this character thing. And I was thinking, wow, my bank, I bank at a couple of different banks. These people they've never talked to me. They've never seen me. No one, when I walk in, nobody says, hi, Emma, good morning, good afternoon, Emma. Nobody says anything.
Yes.
So what do you think as far as, community banking versus, say, these big, national banks and getting lost in the sauce? Why
Yes.
is it important? Why are community banks so important?
Well, when you're talking about community banks, then naturally you're talking about a smaller business unit that's able to have the times to speak with their customers, to get to know them. They tend to be a little bit more involved in the community, and so they're going to have a little bit more time to discuss what is going on. On that character aspect, over time, if you talk like in a relationship, if you meet with each other, you get to know each other, you tend to know things about them, you tend to understand if things started going sideways or you need help, are they going to run away from the problem, or going to try to hide from it, or are they going to come face to face and deal with it? And so that's part of that character, having a strong character of taking care of your obligations and responsibilities, regardless of how difficult they become.
Yeah, and I think that that's something people get afraid that, I've made a mistake, and we all make mistakes. If you're a business owner, you made a mistake the day you quit your W-2 job, because everything else, to me, mistakes are how you learn.
Yes.
Mistakes are kind of what gives you that moxie and makes you who you are. If you think you can go through life as a business owner without bumping your head, you are sadly mistaken. But I think having a banker, a personal relationship with a banker can guide you. People are going to mess up, but just tell them, how do you fix it? How do we fix it after we've made a mistake? We've overextended ourselves. We bought too much inventory. We didn't buy enough inventory. We, lost our biggest customer. I think having that conversation with the banker and somebody that actually knows who you are and knows what you're about, knows what your family is about. Because, if you're talking to two people and you know that somebody has kids and they've got a family and there are a lot of people relying on them, you look at them differently.
Absolutely.
I think it's definitely should be a relationship thing. What are you guys doing? What is your bank doing to get people to understand the values of community banking?
Well, oftentimes, naturally, we have financial literacy that we go into, and we start really young. We start going into schools. We tend to go to colleges and also different centers, wherever we're invited, and we have an opportunity to go and speak. Because banking, in the end, is that we know that we're banking, but also we get our thrill from connecting with the community, connecting with people, understanding what it is that people are going through, whether the excitement about the job or what's the excitement about the business venture that they're engaging in. That gets us excited. If there's any way that we can play a part in assisting with that, then that's a banker, especially community bankers. That's their mantra, is to be a part of that and to help you succeed.
Now, how has your bank, in my industry, I'm in the financial services industry, and FINRA and the Securities and Exchange Commission, I feel, are still, trapped in the 20th century.
Yes.
And, with this tax season that, we're trying to figure out, okay, at the last minute, do people need to open up IRAs and, drop some monies in to get a little bit of a deduction? And one of the things that's tripping us up is check writing, and young people not owning checks. And so how do you get this check into the bank or into your investment account by the 15th? And so what are you guys doing as far as keeping up with technology and being able to meet these younger generations, more technologically savvy generations, where they're at?
Certainly, like any business, you kind of follow the consumer and where is the consumer taking you and what are the requests that they're having. So when it comes to actually the checks, yes, the checks are few and far between because of electronic. And oftentimes, this day and age, we want things much quicker and faster. And so obtaining your money faster through electronic means tends to be the wave of the future.
Yeah, even parenting now is done electronically. Like one of the tips I had to give about, making your kids financially astute was, parents, you need to get with these mobile apps that the kids are on. Stop giving them cash, and it helps you track what they're doing with their money.
Absolutely.
I love it. I absolutely love it because
it does. And with community banking, oftentimes we tend to allow kids to start with a checking account much sooner if there's a custodian on there, it's a parent on there, and that way they can begin to teach them
And
sooner.
see, that is very important because another tip that I mentioned was that kids need to learn to pay a bill. Okay, and so most children have a cell phone.
Yes.
And so one of the things that you can always do with your child, you open up a bank account, if they're getting an allowance, and we've talked about allowances for kids, we don't believe in that. They should earn the money. But from some of that, you can give them their portion of your cell phone bill and their cell phone bill and let them pay it. If they don't pay it, they have to learn how to pay bills. A lot of kids are getting to college. They don't know how to cook. They don't know how to do laundry, and they don't know how to pay bills. And we're expecting people to all of a sudden just fall into lock and step, and that's not how it's happened. One of the terms that I heard from someone was underbanked and unbanked, and I'd never heard those terms before. And then when we spoke, you mentioned it again, and I thought, man, I really need to understand that terminology.
Yes.
So can you explain to our viewers and our listeners what underbanked is?
So certainly, I always say underbanked, also unhappily banked is
Right.
another aspect of it. But in terms of the unbanked or underbanked is meaning that they do not use a mainstream financial institution.
Okay.
So therefore, the unbanked, and the underbanked, they tend to maybe use some of the other means, such as payday lenders, such as check cashing locations.
So those predatory, so unbanked means that you're in an area where there aren't banks. Is that it, or is that
the
underbanked?
vast majority,
Okay.
but you can be almost anywhere and be unbanked. But the vast majority of people we found live at the poverty line or just below it, if you will, and many of our working class blue collar.
But those are the people that need help the most, and it seems like the financial services that are available to them are, charging them high interest rates and high fees and taking it, playing this bait and switch with them.
And I must admit that tends to be a misnomer out there in terms of thinking of that.
Okay.
Oftentimes, just with a little bit of money and a little bit more financial literacy, you can have a checking account without paying any fees whatsoever. It's just a matter of not going over, following the rules and understanding that.
Yeah, now share this if you're finding this conversation valuable. Go ahead and share this link with your family on Facebook. We are dropping gems, financial gems today on Financial Renaissance with the M's. And when we come back, Herb McCoy will be answering or talking to us about those 5 C's of lending again. Nothing boring about this show today, Financial Renaissance with the M's, and we are here with our special guest, Herb McCoy, and we are exploring the most beneficial ways to interact with your local banks. We're talking about community banking today because community banks also reinvest in the communities, right?
Yes.
So there is a role that banks are supposed to play in our communities. Would you like to touch on that a little bit with us?
Absolutely. In the end, as everyone knows, that banks come into a community and they take your deposits, if you will, and they tend to use your deposits to assist with making loans. Now, with that, also it includes that we have to give back to the community. So with all of that, we tend to find whatever organizations that are within the community that comes to the bank that ask for assistance, that give us an idea of how we can participate, we tend to collaborate with those.
Now, you said we have to, is it mandated?
It is Community Reinvestment Act. So in the end, long story short, is that it's somewhat mandated that all banks, if they're in a community, they must participate within that community.
So should people walk into their bank and say, can you tell me a little bit about your community reinvestment program?
They can do that.
They should do that. If you are putting your hard-earned dollars into a bank, you want to know what they're doing to help the community and communities around you. There are a lot of opportunities out there. I know I've been watching I actually used to work in the same building with your bank on Piedmont Road.
Yes.
My first job second job in the industry, I was with American Express Financial Advisors, and we were on the first floor and the seventh floor, I think, in that building. So I got to see the line all the time. But we talked to a lot of people, and they talked about community stuff. And this was right after the dot-com bubble burst or whatever.
Yes.
But yeah, it's pretty impressive as to what banks should be doing with communities, helping out the students, helping out schools, and then also making sure that structurally the communities are sound and giving loans so that you can work in your community. One of the things that I pride myself on, me and my wife, is we try to buy within our community. So, we try to do everything that we can within our community because it's not, it's very easy to go online and order stuff and buy stuff, but we want to make sure that, the kids in our neighborhood have jobs at the grocery store, that, the dry cleaners that's in our neighborhood, that lives in our neighborhood, stays in our neighborhood,
Yes.
things of that nature.
Yes.
So we talked a little bit about the 5 C's, right?
Yes.
And what are those again?
Again, they are character, capacity, conditions, collateral, and capital. And in a nutshell, we mentioned about character and who you are during the good times and bad. Capacity is going to be more or less what else you have in order to assist if it's becomes relatively difficult. Conditions, what are the markets? Collateral, what it is that we're borrowing on, be it a car, be it for the business inventory. And capital, again, what additional sources do you have if you need it?
All right. On the way, we're going to be jumping into how to make your kids you're financially responsible. And then we're going to continue with her. We're going to also talk about the future of banking when we return on Financial Renaissance with the M's. And we are back with Financial Renaissance with the M's, and we are talking about the 5 ways to clean your financial house this week. We're talking about spring cleaning, getting your finances in order. And the 4th step that I want people to work on, and this is actually going to touch on the unbanked also, because when you're planning for your budget, when you're planning for your finances, you have to expect the unexpected. Okay, so you're going to plan for, to retire at a certain age. You're going to plan to have, X number of dollars in your bank account. You're going to make all types of plans, but then life happens. And you always have to expect the unexpected. And that's why having that short-term emergency money is so important. Muy, muy, muy importante. You have to have that set aside. There are a lot of people who, for reasons, not by them doing anything wrong per se, other than being, getting caught off guard. And we can even look back to the government shutdown. The government shutdown caught me off guard by the numbers of people, and it wasn't even it was a little bit more than 30 days, but the numbers of people that had to go to food banks. And then as you're thinking about that, if people are now at their end, it was right after the holidays, are you bouncing checks? And what's happening in your checking account? So what happens to someone who becomes unbanked because they've, had things happen to them in their lives, whether it's loss of job or extensive medical expenses? What can people who are unbanked do to get back into the banking system?
In terms of oftentimes going through those struggles, somewhat coming up with a plan and, again, sharing that with the banker. Most people that have gotten their records to follow them, if you will, because if you leave a bank and you leave owing money, then there tends to be a record there. From a credit standpoint, there's record. From banking standpoint, NSF, you closed an account and the account was charged off. That's going to follow you, not on your credit, but basically on the checking account and within the banking industry. Explaining that popping up when you go to open up an account, you may have the banker tell you this shows up that you owe X with the particular bank. Being prepared to share that story, what happened, what went on, and how long it's been, will come close to your getting over that and starting over again.
Do you ever recommend that people say they've messed up their credit? Do you ever recommend like secured credit cards and things like that for people to get themselves back on track?
Secured credit cards, again, may sometimes include a fee, but oftentimes, because you're trying to get back on your feet, it may be an option for you if you need that, and just that security of not carrying cash around.
And so secured credit cards is a way to get back into the banking system and prove that, hey, I've kind of bumped my head, I've fallen down, I'm standing back up, I'm strong. So for instance, let's say, you have $250 or $500, you give it to the bank, they give you a credit card for a balance of, less than that, a little bit less than that amount, I assume, and then you just pay it back. Now, the money that you gave them, it's going to sit there and earn a little bit of interest, and at some point you'll get that back, but it's kind of securing what you're charging on the credit card just in case you don't pay it back. Then the bank will take, basically whatever your balance is. So that's a good way of looking at, of getting back into the banking system as well. Herb, let's talk a little bit about the future of banking,
Yes.
if you will.
Yes.
We mentioned the millennials, we mentioned just a lot of changes. Are there, certain things that we shouldn't expect to change, and what are some of the things that we, should expect to change?
The things that we are seeing right now that's changing and continuing to develop would be the online banking, the mobile banking, and just banking period online, if you will. So therefore, that has caused the industries to shrink when it comes to tellers. If you think back, it went to ATMs, automatic teller machines, that shrunk the tellers. Then we went on to online banking, doing a lot of banking online from your home in your comfort right there. Then it moved on to the mobile app. It's on the app. It's right there. It's quick. It's fast. Transferring money, moving money. So that is going to continue to develop. And I foresee banking actually getting to a point whereas there'll be additional options provided for you based upon your history, because analytical data is out there. And people track that. People understand you personally. Banking will become more personalized for the individual.
So what do you mean analytic? Now you're scaring me. So what do you mean by analytical data?
If you're using technology, there's no way around it.
Yeah, there's no more privacy. We need to get over that, right?
Absolutely.
Okay, so there's analytics out there that talk about your patterns.
Yes.
What you spend on, how you enjoy money, how you behave in crunch situations, things like that.
Yes.
Is it 2:00 in the morning, or are you taking money out of the ATM? What part of town are you in? Oh, that's being tracked. Oh man.
And with that, with us knowing that this is going to continue to grow, to develop, and the idea is to make it simple for you. So what's not going to change is when we talk about the customer service aspect with that. Let's say that you used to go in and you used to visit teller, she knows your name, you say hello, and now you don't. So the customer service becomes, how quickly can I do the things I need to do online or mobilely? Is it inhibiting me from get to what I need to do? If it's fantastic, it's popping up, it's always online, it's not down, you may consider that great customer service at that point.
But how do we even rate customer service? And again, maybe I'm not a millennial. Okay, so let's start there. I'm not a millennial. But to me, if you're not going into the branches anymore, isn't there kind of a disconnect? Or is the connection, the customer service, based on how fast, to your point, how fast things are getting done?
Oftentimes for your everyday banking, using electronic means is easier. If it's going to be a major purchase, that's where it comes and you want to sit eyeball to eyeball with someone
and
get that comfort
right.
level. But if it's
Yes.
everyday transactions, then it's going to be, how quickly can I do this? If I ask for it, is it happening right then and there?
Yeah.
That's where the customer service is rated. And with that customer service and with this, we talk about security. So security, how is the security of the network that becomes an important piece. So that
Right.
part never changes, right?
So data encryption.
So data
and-
encryption, so we say customer service, security doesn't change, if you will. And the last thing that I'll point out that just simply would not change would be the integrity and the honesty that's built between you and your client.
Okay, so let's touch on that a little bit. And let's touch on, to me, banks can serve one master. Okay. So it's either going to be the shareholders or who else?
Or the consumer.
Or the consumer. So when I'm looking for banks, and I ran away from major banks during the recession, and not because of anything that I did, but I saw the treatment, things that were happening to my clients. And again, these were good people who just kind of, nobody expected the housing market. Well, I shouldn't say no one, but people didn't expect the housing market to crash the way that it crashed.
Yes.
Okay. We knew something was going to happen. We were expecting 10%. That's what I was gearing everybody up for. Oh, we're going to have a 10% correction. And man, we got walloped. But there were people, good people, and that had great relationships with their banks. And to me, a lot of those banks just literally turned their backs on them. And it was, I'm a very moral and ethical person. And I'm like, man, when we needed you the most, you turned your backs on us.
Yes.
So talk about, community banking, and again, the values of a community bank versus kind of a bank that's run by shareholders.
Yeah, historically, Emma, I have to go back to the point of when buying real estate and banks and starting new banks was almost a business within itself. You could start a bank and after a certain period of time sell that bank, or at least some bigger bank will come and look to buy that and eat that up. And so that was just a profit generating industry from that standpoint. And so when the crash occurred and the bubble popped, all that went to an end. And that's when a lot of stricter regulation came in. And so in terms of trying to protect the consumer from this happening again, that did come forth. Although I'm in community bank, I also recommend if credit unions are good. So when you talk about stakeholders, the stakeholders are the consumers when it comes to credit unions.
Correct.
So I give them credence and I give them a lot of credit for being able to offer that options to customers.
Yeah, I bank with, and actually I left a big bank that I'd had since I was 16. At the time I was living in Southern California, and the company that started ATM cards, like I was one of the first people with an ATM card, and so well, I shouldn't say one of the first with an ATM card. One of them out of my friends, I was the first with the ATM card.
And maybe you were one more comfortable in using it, because ATMs were out there and a lot of people weren't comfortable when they first came out.
I mean, but this was 1987. This was exciting. Like, I can access my mom's account by just sticking. I can go to the groceries.
Yes.
It was something new.
So you were the millennial then.
Yes, exactly. I was living in New York and moved to California, and it was like, oh my gosh, I could do whatever I want.
Yes.
But I think credit unions I ended up moving towards because I wanted to make sure that I was with a financial institution that cared about the people. And like I said, I was just, I think a lot of people in the financial services industry suffer from PTSD from the first recession. So for me, it was, I need to know that if anything ever happens to me, that these people actually care about me and not the size of my account. You know what I mean?
Absolutely.
So next up on Financial Renaissance with the M's, we are going to talk with Herb McCoy about giving back and the collaborations between the banking industry and nonprofit organizations. Some comments in. You can also catch me on Twitter at Emma Knows Money, on Instagram at Emma Knows Money. What's the other one? Instagram, Twitter, Facebook, all of those at Emma Knows Money, and at Financial Renaissance with the M's. We're on Facebook and we're on Instagram as well, and on Twitter at M's Said It, EMMS Said It. And again, we are here with Herb McCoy from Fidelity Bank. And Herb, I have a question. We're going to talk about giving back and the importance of giving back. And to me, giving back happens in a couple of ways. Even if you don't have the financial extra or excess to give back, people can give back by volunteering.
Absolutely.
Right.
Yes.
And is it a requirement that the employees of the bank volunteer? Is that like wired in, or
Certainly that's communicated and that is encouraged.
strongly suggested?
Strongly suggested. And so, and if you're doing that and you find a particular organization that you're involved with and you need to raise money, then oftentimes your company will participate with you in that.
Oh, really? So if one of your employees really had a good cause and the bank, heard about it, you guys would jump in?
Yes, we would jump in and assist with that.
Okay.
It can be from branch level on up to corporate level.
Now, why is giving back, so important?
Well, we're back into being a participant within that community, and we want to be known as a partner in there, not just taking away from the community, but giving back and making sure that community strives.
Now, do you recommend that people, depending on, your level, do you recommend that it's something that people incorporate into their financial overall well-being?
I can tell you it will never hurt to do that. But one thing about nonprofit, and I have to admit, is that oftentimes you're serving so many different stakeholders, from the volunteers to the partners to the recipients, and it is not always easy work.
No, it is not. I sit on one board now, and it is a lot of work, especially if there's not an executive. Now that's a whole other whole other gamut. But for me. I give back where I can. I give back where I can teach financial literacy. I give back where I can help, move my community in a different direction or attract attention to it. So we talked a little bit about, your employees and the fact that they are strong. It is strongly mandated that they, do something from the heart for the community. What is Fidelity Bank doing with nonprofit organizations? Are you guys collaborating with local nonprofits
we oftentimes collaborate with many of the local nonprofits. I'm afraid to start naming.
No, you don't have to name. Yeah, because you're going to leave someone out.
Yeah, absolutely. I don't want to do that, but it's just across the board throughout metropolitan Atlanta. And
so it's not just the big box names that we see commercials for. So it'll be and I don't want to say mom and pop, but the smaller doing, that are touching.
Yeah, oftentimes that you give to those smaller ones, they tend to touch a lot more directly, more quickly.
Yeah, there's not a lot of layers there.
Not a lot of layers.
So that money goes straight to the recipients, which I love. Next week we're going to have a couple of nonprofits in, that, and again, it's a big thing for me. Scholarships and financial literacy. It is Financial Literacy Month. So whatever we can do to let the community know, you need the right things to do with your money. Knowing is half the battle, they say, or at least they say that on the cartoons in the morning. Knowing is half the battle. That's what I used to learn. Yes. So listen up. On today's show, we are talking about building better relationships with community banks. We will be back with Herb McCoy in 300 seconds. We are back with Financial Renaissance with the M's. What a great show. We are talking about borrowing, lending, and giving back. We're talking about banking and the role that banks have in our communities. And we're also talking about our 5 financial tips to spring clean your financial house this month. It is Financial Literacy Month. And our last tip for this week is securing your financial future. Now, a lot of people are going to be behind on their financial goals for a number of different reasons, but one of the things I want to tell you is you're not alone. The country, we are in a middle-class crisis right now, so I want you to think about ways that you can help your future. So if that means getting a roommate, coming up with another source of income, fixing up your basement so that you can rent it out, get creative on the things that you can do to bring in extra money, but you don't want to invest too aggressively if that's not what your certified financial planner tells you to do. Now, as far as banking, we learned a lot about banking today, and thank you, Herb, for kind of digging down with us. So some of the things that I want you to remember about banking are knowing what your expectations of the bank that where you put your hard-earned money with, what the expectations of that bank should be. And the one thing I would always tell you to ask people, if you walk into a bank and you're looking at opening up an account, or if you're chatting with someone, because that's how people open accounts now, is ask them about their community reinvestment. What are they doing to enrich the community that you live in? And then if you're looking at making a major purchase like getting a mortgage, a home equity line, or even borrowing money for a business, you want to go into a branch and look at a person face to face because, again, character. How are they going to know your character by how fast you type? 140 characters, 240 characters. It's not going to work. And then the last thing we want you to do when it comes to banking is work on your credit.
Yes.
And you want to tell us a little bit about why is credit so important?
Yeah, credit certainly is a tool, and it's one of those tools that's in your tool belt of life. And I've always broken credit down by being the C is to carry a balance and only borrow what it is you're able to pay back. The R is for records. Records will follow you, so you want to make sure you keep a good track record of that so you can borrow the next time. The E is for errors. Always look for opportunity to see if there's a mistake on your records, stuff that's following you, and make sure that that's cleared up. D is developing a budget to be able to pay that back, be able to know that you're going to pay it back. Sometimes people borrow and they already know they have the money to pay it back. They just slowly build that credit, if you will. And the I is information. Information is power. And so you need to make sure you keep it secure and don't give out information that you shouldn't. Oftentimes there's people calling you asking for pertinent information. Did you call them? If they call you, be hesitant to give out that information. And finally, the T is talk to your banker. Come in and talk to your financial representative or banker.
All you did was reiterate everything I've been saying, and it is so beautiful. Check that credit report. So, Herb, question, I want to ask a question of you. If you could go back in time and you could sit down with your 25-year-old self,
Yes.
right?
Yes.
What would you tell your 25-year-old self today about the future? Or just
Although
about life?
It may sound a little bit boring, but it would be, Herb, develop ability to save versus spend. One of the first things we do when we're born and we begin to grow is that as early as 2 or 3 years old, we know how to spend.
I want. Give me McDonald's,
Absolutely.
French fries.
So learning how to save and to hold true to that savings will take you a very long way in being able to do that.
Now, I don't know if you were when you were young, did you have a lot of credit card debt? Or did you get caught in the credit card trap in college?
I did not,
Okay, good.
and simply because, to be honest with you, I was somewhat afraid and always looked at how can I pay this back. So I came from...
You were an anomaly, is what they call it.
I understand, because in college, certainly you have friends that work for the credit card company offering credit cards, and for college students, they send them out like Tic Tacs.
Hey, it's in the books. When I was in college, you get your books, and in the bookstore bag, there were all these, credit cards. You need to help with paying for your books? Here, fill this out. And it's like, oh, buy a stereo, and,
Yes.
So now there are kids in college now.
Mm-hmm.
And the young people that are in college now that are trying to make a decision, they've got a lot of decisions to make. And I feel that we don't give them enough credit for the magnitude of the things that they have to deal with in today's world.
Mm-hmm.
We want to say that it's hard. It was harder when we were younger. And I don't really feel that. I feel that the young people today, they have no way of really working their way through school like we may have had the ability to do. There are a lot of, there's a lot of things that you're kind of weighing down on them, and a lot of them also saw their parents go through the financial recession.
Yes.
Okay, and were impacted by the financial recession. So they're trying to make decisions about what they should do with the next steps of their lives. What advice would you give to a young person that's trying to decide what path do I go on in my future?
Certainly try and stay true to yourself, what it is that you're passionate about, what it is that you want to do, because oftentimes it will not seem like work if you're fortunate enough to be able to do that. But also, definitely live within your means. It's not oftentimes how much you make, it's how much you keep of what you make. Make yourself a priority. We're back to the saving aspect. Treat yourself as if you are a bill. So pay into yourself and make sure you just do that constantly, regardless of what the dollar amount. Just take a percentage of that. I don't care what it is. And you'll find that'll take you a long way.
Thank you, Herb. Thank you. Those were financial gems. Still to come, Emma Knows Money is focusing on the next generation and the younger generation. I'm going to be giving tips to make the kids in your life understand and appreciate the value of the dollar, coming up on Financial Renaissance with the M's. And we are are back with Financial Renaissance with the M's. You are spending your Sunday morning with us, and we are dropping financial knowledge. We're going to be talking about financial tips for kids, but first, we're going to talk about my financial movers and losers for the week. So let's start with our financial movers. Disney. If you have Disney stock in your 401k, so within the mutual funds that you have within your retirement plans, or if your kids own Disney, I know I'm a big proponent of getting my clients to teach their kids about investing and investing in stuff that they're familiar with. And Disney is always one of those companies. So Disney was up 11.5% this week. Now, Disney also released last week that their streaming service, how much it was going to cost, and all the wonderful Marvel movies and programming that's going to be available. I was originally saying, no, I'm not messing with Disney streaming service, but I have to talk to the wife about that. I'm on notice. And then Dow Inc. Was up 6.2% this week. JP Morgan Chase, they are in the news a lot over the last few weeks. They're up 4.7%. And then Boeing, believe it or not, is up 2.6%, and then Goldman Sachs is up 2.5%. And then our losers for this week are United Health Group. They're down by about 5%. Chevron Corporation is down about 4.9%, and Pfizer Inc. is down 1.3%. ExxonMobil, another oil and gas company, down 1.3%, and then Merck and Company is down 0.5%. So that's barely moving. Now, there are some, here at Financial Renaissance, we have our own early recession warning indicators. And you may have heard about this a few weeks ago about the 10-year Treasury inverting with the 3-month Treasury. Well, the real number that tells us whether or not we're heading into a recession is the 10-year and the 2-year. So the 10-year Treasury ended the week at 2.56%. And the 2-year Treasury note ended at 2.39%. So we're about a 20th of a percent difference between those two numbers. So you want to keep your ears and eyes open for that. And again, we've been talking about saving money, building your cash reserves. Like, I don't know what else to say, but the storm is a-coming. The storm is a-coming. We don't know when. We won't know when until we're in it. Again, I will not be on air going, the recession is going to start tomorrow. That's not how it happens. Usually we're in the recession before we realize we're in the recession, and then there's a ripple effect. So remember, pay attention to that 10-year, 2-year Treasury numbers. Now, let's jump into my top 5 financial stories of this week. And top 5 stories that I am looking at is Green Lane Holding. This is a company out of Boca Raton, Florida, and they sell cannabis products, vapes and accessories like the little papers and pipes and all this stuff. And, so you may be asking yourself the same thing I asked myself: how in the heck is this company about to go public? I thought that marijuana and cannabis was illegal. To my knowledge, it's, on the state level, it may be legal, but on the federal level, banks aren't touching it. It's still federally against the law. So why is this company likely to be approved? It's because Green Lane does not touch the plant. They don't touch it. They make the stuff to touch it. So because they don't touch the plant, they don't distribute marijuana, they don't sell marijuana, so they're on the right side. They're not, drug trafficking or racketeering, according to how the federal government is still looking at marijuana. So Green Lane I'm looking at because they're about to do their IPO, and I'm pretty impressed to see what's going to happen with that. I feel like it's only a matter of time with Green Lane. And so the other thing looking at with Green Lane, there's other ETFs. There are other companies that deal with the marijuana industry. However, Green Lane is looking like, hey, they are on the right side of it. They're doing the right things with it. They're going about it the right way. And I think that they are just going to be the drop in the bucket, and we're going to see a whole lot of other things to come after Green Lane goes public. All right, and then the second story that I'm following this week is going to be Facebook. And you'll hear me talk about Facebook a lot. Facebook is an oldie but goodie. Facebook is like that teenager that you have at home that just won't do right. Like, you leave them home alone for the week, and you're like, hey, don't touch my car. And you even put a little, chalk mark, and some of you know about this, leave my sports car alone, and you put the little chalk mark on the ground, put a little chalk mark on the tire, and that kid still takes it. Well, parents just don't, and parents just don't understand news. Cisco was out there doing their digging, and they ended up finding dozens of open air groups that were peddling cyber crimes to almost 400,000 Facebook users. And in a blog on Cisco's website called Hiding in Plain Sight, they identified 74 groups on Facebook that were doing all types of back alley, shady dealings and illegal activities over the past few months. And while I was shocked that it was in plain sight, because I'm thinking of my nieces and nephews and what is it that they're being exposed to on Facebook, but I think the markets, we the people, I think are just over being surprised and outraged by Facebook's antics, and that's even shown in their stock price, because their stock price has remained numb to their bad behavior. In 250 seconds, continuing with my top 5 stories for the week on financial renaissance with the M's. We are building our financial houses this morning, financial knowledge seekers on financial renaissance with the M's. And I am talking about my top 5 news stories of the week. The IRS. What if I told you that there is $1.4 billion just kind of sitting there in unclaimed tax refunds? Would you believe me? You should believe me. I never tell an untruth on the air. Well, most of the time. But the IRS has set a deadline. If you have not filed your 2015 tax returns, you have until tomorrow to file your tax returns. So there are over 1 million tardy taxpayers who still have not filed their 2015 tax returns. And literally, this $1.4 billion, if it is not claimed, will end up back in the Federal Reserve. Or excuse me, back in the Treasury, not the Federal Reserve. Those are two different things. So if taxpayers miss the deadline, the unclaimed money, as I mentioned, will revert to the Treasury Department. There is a 3-year time limit to claim a refund. There's no penalty for filing a late return if the IRS owes you money. So make sure that if you need to get online tonight, fill out that 1040 yourself, go ahead and do that. But this is your last chance to get your refund from your 2015 tax return. Now, if you need help with that, you can go to irs.gov, and there will be some instructions on getting the 1040 forms and the documents that you need from 2015. You can also call the IRS. If you go to irs.gov online, you can look up the information, go ahead and contact them, reach out to them, and ask them what it is that you need to do to claim this money so that it doesn't go back to the Treasury. They're playing with enough money. Now, the next story that I'm following has to do with my favorite group of people, the millennials. And I love the millennials because millennials remind me of the baby boomers. Actually, the millennials are larger than the baby boomer generation. Okay, so we have a new force to be reckoned with. And the millennials I love because of their attitude. And millennials right now are not conforming to illogical traditions and norms. Okay. This is what happens when you let your kids play with Google and, they have access to everything on smartphones. They get a lot smarter and they start looking at things. And the news story has to do with the fact that millennials are not buying large, elaborate houses that boomers once had, or that boomers are owning. So we've got states, the states where we have, a lot of boomers living in the warmer states, like your Floridas, your Arizonas, the Carolinas. The Wall Street Journal has reported last week that millennials don't want to buy baby boomer sprawling estates. So if you've got like this 4,000 square foot home and you're planning on downsizing and you're out in the burbs, you're not going to get a young family to pick it up. Younger families now, younger people today are looking for places where they can work, live, eat, relax, where they can walk to the grocery store, where they can walk to their dry cleaners, where they can, be more ingrained with their community. So what ends up happening, if you have selling your house as part of your retirement plan, part of your financial plan, you need to talk to your financial advisor, because a lot of these homes are ending up sitting on the market and they're selling at massive price cuts. So if you were planning on getting, making an extra 200, 300,000 on your home and putting that into retirement savings, you're going to need to reevaluate that. And so this is the time to, after tax season, after tomorrow, you need to, reach out to your CFP and say, hey, we may need to rethink my downsizing because there may not be a buyer for the home that you have. So millennials are not interested in big homes. They're not interested in the maintenance of large homes. They're not interested in the style and the location of homes that are not in these urban city areas. And one of the other things is that it's very hard for millennials to buy their homes at all. From a credit standpoint, they have a lot of student loan debt. They may not be earning as much, so it's going to be very, very difficult for millennials to buy the homes that baby boomers had, and quite frankly, they're just not interested. They're just not interested in those homes at all. So my fifth story, and I'm starting to think I have a secret financial crush on Jamie Dimon, but he keeps putting himself front and center, so I don't know why he's doing this, but I think he was considering dropping his name into the presidential candidate stew. But much like Howard Schultz, last week he kind of fell flat on his face. So if you remember last week, I brought up Jamie Dimon and him writing the second longest shareholders letter at 46 pages. It was more like a manifesto, and in this annual letter he did his proverbial finger wagging at the Wall Street, in financial institutions and at big banks, and he talked about income inequality and student loan debt and all these things that were really hurting our society and messing up our economy. Well, then he had to go to Washington, and he had to talk in front of Washington, in front of these Congress people, these representatives, about banking. And there is a representative from my old neighborhood in Southern California in Orange County, Katie Porter. She's out of Irvine. And she asked Jamie Dimon, like, hey, if I wanted to be a bank teller at your bank and I was a single mom, I'd be making like $16.50 an hour if I was working full time. And then she went down to explain how that $16.50 would break down in Southern California, what it would cost for rent, what it would cost for food, what it would cost for utilities, what it would cost for childcare. And when she got down to the bottom, there was this person was at a negative $500 a month. And Jamie Dimon, who again was, just wrote a manifesto on income inequality and why we need to pay people more and why, things in our country and with our economy needs to change. We're at a, DEFCON 3 right now. Well, Jamie Dimon proved that he had no knowledge of income inequality, other than it being a catchy phrase right now, because when Katie Porter asked him what did he think should happen because a person had a negative balance at the end of the month, he said he didn't know. He'd have to get back to her. He had no idea what to do. And now, mind you, J.P. Morgan Chase just, I believe, they made about $3 billion in profits for the quarter, and he had no clue as to what to do. And Katie Porter, shout out to her because she is a law professor, and she has expertise in bankruptcy, and she really, held him to the fire. And remember, with the 2017 tax law changes, they were telling us that corporations, if we reduce the taxes for corporations would bring money back into the country. Corporations would then increase people's salaries, and it would be this whole trickle-down thing. And so Jamie Dimon, sitting there in Washington, in front of all the cameras and for all America to see, was asked a simple question. A person in Orange County, California, which is one of the most expensive places to live in the country, is making $16.50 an hour as a single mother and is negative $500 every month. What should happen? And he was absolutely clueless. And he gave a Shaggy-Doo response. And when I say Shaggy-Doo, think of Scooby-Doo in that mystery van. And I don't know if he was eating Scooby snacks before he got on camera, but saying I don't know just doesn't cut it. To me, it shows me how out of touch you are with the hardships of Americans. We keep talking about there being a middle-class crisis in our country. And then to just kind of put the nail in the coffin of this, Jamie Dimon doubled down on Friday. There was a conference call that he had, And, it came up again, Jeff, a couple of other bankers have, and a couple of other industries have decided that they were going to increase their minimum hourly wages for some of their employees. And, that came about, and then also, his performance in Washington. And Jamie Dimon started out by saying that, hey, $16.50 an hour will, eventually increase to $18 an hour in some high cost areas. But $16.50 is really an entry level position for people who are really just out of high school. So again, not thinking that there are people who may have degrees, that are single parents, etc., that may be earning this money, and it is not enough to survive. It is not enough to raise another human besides yourself, if yourself at that. So it was just really, really shocking to me that he would say something like that and not have been better prepared. I know that they pay lobbyists millions of dollars to assist them and prep them for testifying in front of Congress and the House of Representatives, etc. And so for him to still to say, I don't know, I was like, my feelings were hurt, because I was really hoping that, this was the turning of the tide of increasing the wages of the people in our country, so that people could save money, so that people can retire, so that people can pay off their student loan debt, because that's the next bubble that's coming. So it was just very, very heartbreaking to me that was his response in front of Katie Porter, and then on Friday doubling down and just saying not only that these jobs are entry-level positions for people just out of high school, but he then, said, you have to look at other industries too. It's not just us. And, that's one of those things when, when my son was growing up, if he talked about, if I, hit him on something that he was doing wrong, if he brought up friends or anybody else, he was just automatically on punishment. Like, don't come at me with stupid stuff like that. Don't say that. We're talking about you right now and what you're doing. And so I hope Jamie Dimon takes the time to read his 46-page shareholder letter and come up with some real ideas, some real thoughts about what should happen with income in this country. He has an opportunity. I mean, again, for the quarter, billions of dollars came into J.P. Morgan Chase. And so they can carve off a piece of that and profit share and give everybody bonuses. And again, I'm not reading their balance sheet. I don't know where their money should go, shouldn't go. But it is clear that people that work for the banks, there are people that are working that need to be making more money. And it's not enough to say, well, if you want to make more, you have to put more into your job, etc. We can't do that anymore. People need to be at home raising their kids. If we don't want kids in jail, if we don't want kids outside, doing crazy things in our neighborhoods, then we need to make sure that their parents are home at a decent hour after school to feed them dinner and take care of them. So, Jamie Dimon, I'm asking you, please read your manifesto, read your shareholder letter, and then come back to us with some actual tangible ideas of what you're going to do to increase or eradicate income inequality. On Financial Renaissance with the M's, on the way, we're going to jump into Emma Knows Money, and I'm going to give you your 5 tips to make your kids financially responsible. And this segment of Emma Knows Money is brought to you by clearbottoms.net. The warm waters of South Florida may feel great to you, but for your boat causes growth of algae and barnacles, call the diving specialists at Clean Bottoms to handle all of your underwater boat and yacht needs at 954-278-4514, or you can check them out online at clearbottoms.net. And now, on Emma Knows Money, we are going to run into the next 5 tips that you need to do to get your kids to be